Alrighty, guys, it is 3:30. It is Thursday, May 28th, and we're looking at the market holding on to their gains. So as we thought in the last update, we might run out of gas and went into a holding pattern, and we've been doing pretty much a channel right now going sideways. Hasn't been sold off. It's just pausing and building value. So we are a lot biased to the upside, that's for sure. And it just depends a little bit what happens with that. If Trump approves that 60-day period, I think the market keeps going. Everything's going to be pretty much intact. If he rejects it or something keeps going, we may see some weakness out of that. But right now, it feels very much like the market is on track to keep trading, to keep going higher. Nasdaq is almost in new territory. ES is already extending into new price discovery. So it's pretty spectacular. So the news this morning was pretty much flat on the PCE and pretty good on the rest. So market is in a good mood going into Friday. And as I said, the only caveat could be that there's a bit of window dressing going on going into the close of a month like this. But we'll find out on Monday if that's really for sure or not. Now tomorrow morning we get international trade at 8:30. We have Chicago PMI at 9:45, and that's about it. Baker Hughes rig count at 1, but pretty much non-news to drive the market tomorrow. So you're probably going to see more of the same. It's strong market, bias to the upside, trying to take this higher. So I would just stay on the long side right now. Right now, looking to buy weakness on the ES against that 75.70s, against the 75.50s, these two support areas. If they trade below the 75.50s, you're taking off the long bias and go back range bound. On the Nasdaq, we're going to be looking at buying against the this edge down here at the 250s, against this ledge at the 190s for rotations up. And give it one more level down to 120s. So if they take out all these three, take off the long bias and go back range bound. It could be a nice short in there if they start retracing the single prints at the 230s. If that starts happening, could be a nice short trade, running it down to the 180s. But I would look for buying opportunities against these areas for rotations back up. And as you can see, I have not tried to re-engage it after my last little trade there. I got in. It's easy. One of them went to break even, right back down again. This one I got aggressively out of, so that's why I got my $15 back. But I'm still down $15 in those four trades. So, and right now there's nothing really to trade here. It's just unless you're trying to trade the edges, buying the lower edge and getting out at the upper edge. But as you can tell, the upper edge hasn't been super well defined. The lower edge is a little bit better. So overall, it feels very much like we're looking at the market, which is sloppy. Sloppy is the word for it. And I'm actually looking for a pop to the upside. Maybe I'll try a long trade late in the session here on the late pop. We'll see. But it's as you see, I mean, it doesn't necessarily need to, but it could be. And the market hasn't really backed off a whole lot. So I would not be surprised if we get a little pop going into the close here. Oil is trading below 90. That's a strong signal right there. So it could set up a nice little summer rally here if this keeps going like this. And as you can see, the overall the software stocks today has been pretty much on fire. They've been the Palantirs and the ServiceNows and the Microsoft all on the upside in a pretty good way. Oracle is to the upside as well. So they get beaten down pretty good, but they're up big today, all of them. So it looks like software companies are getting some love today. But man, it is something. So to watch, market is really time to making a statement right now. So I would just stay on the long side, not being very aggressive on the short side. Any short trades I take would be like when they extend and they pause a little bit and you're expecting a little bit of a pullback. But as you can tell, you can easily get caught in that unless you have a tight stop. Those losers can be big. So I'm just tightening. I keep tight stops, and if I try short trade, I tried a couple of long trades, but as you can tell, especially on this guy right there, you're getting in late. I was stopped out right here on that bar, and it's crunched it a little bit. So you see on this bar right here, I got stopped out on that. That was a short there, got stopped out, had a pretty tight stop, and then I tried a long trade, but that's late in that long trade, and then but it popped pretty good after that, and then right back down again. So that's the issue when you're trading, when you're kind of following or trading, doing a go with trade to the upside or downside. That you really have to, if it pops in usually Nasdaq reverse is pretty good. It always shakes you out. So I try not to take them, but sometimes you just got stopped out and the market is running against you. So I figure like, okay, I'm wrong side of it. I'm trying to get back on the right side of it, but it's as you can see that they just didn't go very far on that one. That whole trade setup, that whole trade strategy is something you should stay away from. So if you're wrong on a trade, just sit on the sidelines a bit. Reversing it like that usually doesn't work well. So it's just the weakness I got. I said to do that, but sometimes that works out more than often. It just ends up with a shakeout trade. Anyway, so there we have it. So staying alongside. Let's see what happens going into tomorrow's trading. It's Friday. It's last trading day in June. Oh, sorry, in May. On Monday we trade in June, and let's see how the whole thing develops. Alrighty, guys, we'll leave it there. So you have a great week, great evening, and I'll see you back tomorrow. All right, guys, later.